Hey traders, so welcome to the introduction of lesson number 1, Money and Risk Management, Combat Defense Program, Becoming Resilient. Now the reason why I said Combat Defense Program is because in reality you have to work on your defense first when you learn how to trade, because if you don't have any defense mechanism in the markets, you are nothing. You will lose. So basically, if you have this amazing strategy on how to, capture 100 pips in the market, but if you don't have proper money and risk management, you will fail as a trader. And in the long run, you need to employ proper money and risk management in a system where it's designed to make you money. So in reality, this has got to be one of the most crucial aspects of the whole trading course, and one of the reasons why I teach it first before anything else that we learn in the course. Okay, so now we're going to go over what we covered in lesson number 1. So we're going to go over the truths to risk to reward ratio and why there's so many misconceptions on the internet regarding this risk to reward ratio, that you need to maintain a certain level of risk to reward. In reality, no, you don't. It really depends on your trading system, as we will discuss. There are plenty of traders out there that actually risk a lot more money than what they expected to gain in return, and they are consistently profitable in the long run. So we will go over that, and we'll show you different models and different strategies that actually employ different risk to reward ratios. Okay. Second, we'll go into the percent risk per trade. Now, generally, traders, they don't like to risk a certain amount more than their threshold. So, this is part of your risk to money management, right? Keeping your risk in check. Variable position sizing, which goes along with the risk per trade, digs into deeper knowledge of how big your trades should be, right? And then if, for example, you went through a losing streak and you want to recover from a drawdown, we show you what to do exactly and how to prevent it, because that's basically the main idea of this whole lesson here, is really to prevent a major drawdown, because recovering from drawdowns suck. We all know that, right? If you lose 50% of your account, then it takes you a 100% increase to go back to your original amount. We want to avoid that as much as possible, right? So, and the only way to really do that is actually keeping your risk in check. Okay, so then in order to prevent from a significant drawdown, we also want to ensure long-term survival, right? So we're going to go over risk of failure charts. I prepared a few charts for you traders to actually give you some mathematics behind the whole system that you will create for yourself, right? So then after that, we'll go into advanced trading statistics. This is a little bit more in-depth knowledge of what your statistics should look like for your trading system and how to increase probability and accuracy with your trades at the end of the day. So this is the introduction. Now we'll go into the subsections of this lesson.